Okay, cool. So for today, we are going to be covering the strategy that I trade with every single day, and also just going to be going over some important tips that you guys should really be looking to take advantage of and really just make sure that you're capitalizing on every single trading day. So let's go ahead and start out with the strategy that I use. Now, if you guys trade every single morning with me inside the Discord, then you guys are pretty familiar with what I'm about to show you, but I'm going to break it down more in depth so you guys really have a better idea. Now I'm going to stay strictly on the charts. Sometimes I would do like a bit of a Google Slides, but I'm just going to stay strictly on the charts so I can explain to you guys everything as best as possible while you are also seeing it. So the strategy that I use is supply and demand. Now, essentially, exactly what that means is I'm looking for areas on the charts where where there's the most amount of supply or most amount of demand. Now, what that exactly means is areas where we have most amounts of demand are typically areas where buyers are going to step in heavier than usual. Areas where we have lots of supply are typically areas where sellers are going to step in heavier than usual. Keep in mind, market moves based off of two different orders. I say this all the time, and these two different orders are buy orders and sell orders. Now, buy orders and sell orders are constantly being inputted within the market, right? That's how price moves. Whether price is moving strong, whether price is moving slow, whether price is consolidating, there are constantly buy and sell orders being inputted. Now, we as traders want to look for areas where previously there were an excessive amount of buy orders or an excessive amount of sell orders on the charts, typically because those areas indicate either supply or demand. Now, going more into depth of what these areas actually mean is when we have those demand areas, areas where we tend to see lots of buyers, those buyers are actually stepping in at those areas because those are typically the lowest point on the charts, pretty much the discounted price. So when you are looking at the charts and you look at the lowest point possible on the charts, the lowest point possible within price is also like a discount, right? So they're looking to get in at a discount so they can get in at the lowest point possible and also make the most profits possible, right? Because what's the point if you're going to get in late? They want to make sure that they get in as early as possible, and that's why they take advantage of demand, the discounted areas. Demand is also known as a discounted area. Now, supply, those are areas, like I said, where we see lots of sellers. But why do those sellers exactly step in there? Because when price gets super extended and so high to the point where it pretty much can't continue to move up anymore, then that's when we have sellers start to step in and push price to the downside because price is so expensive to the point where traders want to be sure to take profits at the highest point possible, sell at the highest point possible. And once you have a ton of traders selling in one area, like I said, once you have a ton of sell orders being inputted, that's going to move price to the downside. Like I was saying earlier, market moves based off of buy orders and based off of sell orders. But within the market, when more buy orders are being inputted, price is going to be moving to the upside. When more sell orders are being inputted, price is going to be moving to the downside, right? So like I was saying earlier, we as traders want to look for areas where there were the most amounts of buying and most amounts of selling, because those are the areas on the charts that are going to give us the strongest, best moves possible, right? There are also areas on the charts that are kind of indications to us that, okay, price is likely to reverse at this area. Why is it likely to reverse at this area? Because demand areas, aka those discounted areas, those are areas that buyers are likely to step in heavier than usual, and supply, which is the selling areas, aka the price premium is what they call it. Price premium just meaning when price gets to the highest point possible, the most expensive point possible, then you're going to have lots of sellers stepping in. Okay, keep that in mind. So that's pretty much a whole breakdown of what supply and demand actually means. Now, how do we actually spot it on the charts? So, like I was saying to you guys earlier, let's start with demand. So, for example, demand is areas where we see a ton of buying being inputted, right? Lots of buyers stepping in. Now, what does that mean when we have lots of buyers stepping in? That typically means that we see a move to the upside and a pretty aggressive move to the upside, right? So let's go ahead. We're on the charts. Now, what I'm going to do is I'm going to start on the 5-minute time frame. Okay, I'm going to start on the 5-minute time frame, and what I do is I typically look for the strongest move possible to the upside, right? In this case scenario, we're focusing on demand, so we want to look for an area on the charts where we're seeing a pretty aggressive move to the upside, and also at a pretty low point on the charts, because like I said, demand is also a discounted area. So we want to find a low point on the charts, which equals out to the discounted area. And we also want to find a low point on the charts that then led to a strong aggressive move to the upside, indicating lots of buying stepping in. Now, why are we exactly doing this? Because once price goes and retraces back to that area, a previous move or a previous situation, like how we had previously, lots of buyers are likely going to step in again. Now, let me show you exactly what this means, or exactly how you can spot this, all right? So, one example, let me try to find a solid example for you guys. So here's a pretty good example. Now, I already have this drawn out, but let me just delete it so we can draw it out fresh, all right? So right here, we see a pretty low point on the chart, right? We see strong lows being created, we can see strong rejection, and we can also see a pretty strong move to the upside here, right? Let's kind of zoom in a little bit more so you guys are able to see. Nothing too crazy, but compared to usual, you can see that the candles are larger than usual, more aggressive than usual, indicating lots of buying. Same thing here. You see a low point being created, like a low point on the charts. Then what does it lead to? An aggressive move to the upside. You can see this one's even stronger, right? So we have a pretty aggressive move to the upside after strong lows were being created. So what we want to do is we want to mark out the point before we had the aggressive move to the upside. So what I'm going to do is I'm going to get my zone out, my box, and I'm going to mark out the candle previous to the aggressive move to the upside, okay? So that would be this black candle here, because you can see after this black candle, we then had a strong push, then leading to another strong push, indicating strong buying, right? So this would be a discounted area, aka a demand area, aka a buying area. So let's go ahead and mark out that whole black candle, including the wick and the body, and then extend that zone out. Right now we have our demand zone. So once we see price move back into our demand zone, what do we see? We see a rejection within this zone, and we see strong buying start to step in. You can see we have that strong buying wicks, strong buying candles, indicating strong buying being inputted. Right? You can see we had strong selling here, a strong move to the downside here. Well, look what happened once we tapped that demand area. Where did all that strong selling go once we tapped that demand area? It started to kind of dissolve, because since those buyers were so strong within that demand area, since there were so many buying orders being inputted here, it overlaid on the selling, which then gave us the rejection and reversal to the upside, and you can see how strong we actually moved to the upside. Keep in mind, this is only the 5-minute, right? So the 1-minute would be looking even crazier. So just another perfect example. And then obviously, if I were to take this trade, we can just go boom, boom, entry inside of demand, stop loss outside of demand. You can target your previous highs, or you can even target the supply zone in beautiful trade, right? Beautiful rejection, beautiful reversal, beautiful buying stepping in within that demand zone, right? And why did we get buying stepping in within this area rather than any other area within the charts? Because like I said, this was our demand area, meaning lots of buying was stepping in. Because keep in mind, buying is constantly being inputted. So is selling, right? Like I was saying, buy orders and sell orders are constantly being inputted, but this is where lots of buying is being inputted. Keep in mind too, buy orders and sell orders are just money. They're just money being inputted. So the more orders we have, the more money that is being inputted to the markets. The market moves off of money, right? So the more money that is being inputted, very self-explanatory, the stronger that we are going to be moving. Okay, so let's go ahead and focus on supply. Anyone have any questions so far? Definitely feel free to let me know and in the chat. But if not, we're solid. Okay, cool. So let's go ahead and now we want to focus on supply. So we focused on demand. We covered what demand exactly was. We covered how we can find demand. And you know what? Let's do one more example of demand, actually. I want to do 2 examples of each so you guys can really understand how to do it and why I also do it as well, right? So like I was saying earlier, for demand, which is the area where we see excessive amounts of buying stepping in, that's typically areas where we see strong moves to the upside on the charts. So that's exactly what we want to look for. So right here, we can see a pretty strong move. We see a low point, a strong low, and we see a pretty big move to the upside into this supply, right? So let's go ahead and mark out the candle previous to the strong move, including the candlestick wick and the body, and then let's extend this out. Now we can obviously see that price isn't even close to trading this zone, so let's go ahead and find another example. Now, another example, let's switch over to Tesla so we can kind of do it on a different ticker. I want to really get versatile here and show you guys as many different examples. Okay, so here, let's go ahead and this would be pretty solid. Now, this was actually a trade that I had taken the other day inside voice chat, actually. I'm sure some of you in the call were probably there, but let's go ahead and go over this zone and cover it. Okay, cool. So let me go ahead and just delete what we have so far and do it fresh so you guys are able to kind of understand. Perfect. So here we can see a strong low being created, or also a low, and then aggressive move to the upside, right? Indicating strong buying. Now, in this case scenario, I'm glad we actually came to this certain example because we can see here that this black candle, which would be the candle that we would mark out, since it's the candle previous to the move to the upside, you guys would see if we were to mark this out, look how wide this zone would be. Now, this is just not ideal. Main reason for this is because it kind of ruins our decision making because the zone is so wide to the point where like you don't know where to enter, and also B, it ruins your risk because you typically, for me, my stop loss would just be an invalidation below this zone. So let's say I were to enter like right here and stop loss was all the way down here, that would just make absolutely no sense. That would be a horrendous stop loss. So typically for me, what I would do is I would either go to the 30-minute and see if the candle would be smaller, or if that's not the case, I'll show you guys what I would do. If I can find where that was. I believe it was right here, if I'm not mistaken. I think this is it. Yeah, I'm almost positive it is. Okay, so here we can see the 30-minute. Now, the 30-minute looks a lot more reasonable. So what I'm going to do for the 30-minute, would that match up? Yeah, that would. So what I'm going to do with the 30-minute candle is I'm just going to mark out the candle body and then the bottom of the wick. Since this is demand, I'm not going to mark out the top wick. I'm only going to mark out the body and the bottom of the wick. Keep that in mind, okay? This is on the 30-minute. So let's extend this zone out all the way. And then let's go back and then see how it looks on the 1 minute. Let me make this zone orange so we kind of have a better idea of where we exactly were. And let's see how well this zone reacted. Now this zone could have been invalidated or it could have worked out well. I do want to kind of cover an invalidation example so you guys can understand how to kind of trade with that too, because understand that these zones aren't going to be working 100% of the time, right? But I think this one is pretty damn valid. Yeah, it is. Wow, that's crazy. Okay. So in this case scenario, this was the exact zone that we had just drawn out on the 30-minute. It is a little bit wide, but it's a lot less wide than the previous one that we had done. But you can see that it was created right here. So initially, here's our demand zone. We want to wait for a move back into our demand zone. So we want to wait for a retracement because here's where it was created. So obviously we wait for a retracement back into this demand. We take our entry right here. I literally took this exact trade. I'm not even kidding. I entered right here. We had a push up right here, moved into this fair value gap, went back to break even, and then we absolutely exploded to the moon. Like I said, I took this trade live and I recorded the whole thing. It's on my Instagram. But anyways, what you could do again in this situation, let me see if this could work out. What you could do for extra confirmation, you guys have probably seen me do this, is the demand zone was created here, right, on 30-minute. So now that we're on the 1 minute time frame, let's create a 1 minute demand zone inside of our 30-minute demand zone. Now this is lethal. This is one of my favorite confirmations, okay? So what I'm going to do is I'm going to just mark out the bottom wick. We can do the black candle or we can do the blue candle. Now typically for the 1 minute, a lot of the times I'll just be marking the wick. Sometimes I'll do the body, but a lot of the times I'm really just doing the wick. So for example, you guys can see on this blue candle, I'm going to mark out the bottom of the wick because this was the point before we had a strong push to the upside. Strong push indicating lots of buying. So we have our 1 minute demand zone, extend that out, and look how precise that is. Look how precise that is, right? So we move up, we retrace back into our 30-minute demand zone, we tap into our 1 minute demand zone, and like I said, look how precise that is. Reject into our 1 minute demand. We had a nice little push to the upside. Small little reversal, but it's okay because those buyers were still there. They were still active. Right into that 1 minute demand. Didn't go lower. Didn't reject, or it did reject obviously, but it didn't go lower than that 1 minute demand, and then we absolutely exploded. So another solid example of demand. Now let's go ahead and hop on over to supply, and let's make some magic happen. Hopefully you guys are finding some value so far. Okay, cool. So for this, let's hop over to the 5 minute time frame. Typically for me, when I'm drawing out my zones, I'm mainly going to be on the 5 minute, okay? 5 minute or the 30-minute. Obviously, I'm always trading on the 1 minute. I'm always entering my trades on the 1 minute, but in terms of charting my zones out, it's either on the 5 minute or on the 30-minute, all right? So for this, for supply, vice versa to demand, this is going to be an area where we have lots of selling. So in this case scenario, we want to look for a strong push to the upside, right? We want to look for a strong high because that's where the price premium point would be. The most expensive highest point would be. That would be the strong high, then leading to a strong move to the downside. right? Rather than demand being leading to a strong move to the upside, it's just going to be opposite. So here's a perfect example right here. Oh shit. So we have a strong high created here, or resistance. I already have this supply zone, but let me just redo it for you guys. Strong highs being created here, then leading to a very aggressive move to the downside. You can see how strong of a push we had to the downside. Keep in mind, the stronger the push, the more the sellers, right? Or regardless of what side it's going to, regardless of if it's moving to the stronger it moves to the downside, the more sellers are active, right? The stronger it moves to the upside, like the bigger of the move that we have to the upside, the more buyers that are being, or the more buying orders that are being inputted within the markets. So, like I said, strong highs, then leading to a strong move. So we want to mark out either the highest candle before we have the move to the downside, or just mark out the candle before we have the aggressive move to the downside. In this case scenario, or honestly in most cases scenarios, I'm marking out the highest candle possible before we had the move to the downside. Because keep in mind too, like I said, supply is the price premium, meaning the highest points, expensive points on the charts. So we want to mark out the highest point, which would be right here. So let's go ahead and mark out this blue candle right where my mouse is. Let's just do the whole candlestick, the wick and the body, and then let's extend that zone out. And just look how precise that is, right? Let's go over to the 1 minute. Because right now we are on the 5 minute. Sometimes, like, I even surprise myself. Okay, wait, where were we? Okay, we were right here. So here's the 1 minute. So here's where our zone was created. Or our zone could have been created over here. Look. Same thing here. Strong high, then leading to an aggressive move to the downside. Right? It connects. You can see it pretty much started here. So we had the strong high, then leading to the downside. Within this same area, what happened? Strong high, then leading to the downside. We extend that zone out. So we're like, okay, we've seen 2 rejections inside of this zone / reversals. So now that we know that, we're a bit more confident in this zone because we've seen it reject. We've seen it reverse from this area. So now we kind of know that this supply area is more of a high probability area. Look what happens, right? Market obviously closes very shortly after we tapped in. But we tapped that orange zone, which was our 5 minute supply. And same thing, strong highs were being created, led to a strong move to the downside. Why did we have strong selling here? Because supply is our price premium. Like I said, the point on the charts where lots of sellers are looking to step in because it's at the highest point possible, meaning they want to take the most profits possible on their position. There's no point in holding it until their position's at a lower point because that's less profits for them, right? And then you can obviously see we get that rejection, reversal to the downside, pretty nice reversal to the downside, and then market closes. But you can even see we continue to move to the downside and then into the demand, right? So from supply all the way into demand, and then we had a pretty strong move. Or it looks like this was like a news candle. I'm not sure what this was. But that would be one example for supply. So let's go ahead and cover a second example for supply, and then we'll go from there. So let's hop over onto another ticker. Let's do NVIDIA, for example. Let's do an example of supply. I also want to do an example of when the zones don't work out, right? How to kind of deal with that. So same thing applies. We want to look for an aggressive move to the downside. So right here, I can see a pretty aggressive move, right? We see some strong highs right here, strong high to the downside. Or let's go to the 5 minute. My apologies. We can do our zones on the 1 minute, and this is something that I used to do a lot, especially for for the OGs. You probably know, but I switched it up because I had noticed that charting my zones out on the higher time frame gave were more high probability for my zones, and I just had seen more success. I had seen bigger moves. Was just more confident in my zones, so that's why I switched more to the higher time frames rather than strictly only using the 1 minute to chart my zones. But here's just a small example of demand. I know we're covering supply, but we can see a low being created, then led to a strong move to the upside. So we want to mark out that low, extend it out. We see price tap back into that demand zone, absolutely, explode to the moon. So let's go ahead and look for a move to the downside. This would be post market. I want to get an example while market's open. A good thing to do to help you out too is just zoom out. Just zoom out, kind of get an overview of where you see the strongest moves to the downside, where you see the strongest moves to the upside. It really helps you out rather than being so zoomed in. I do see a pretty solid example right here for supply. So, right here, what do we have? We have a high being created, a resistance being created, then led to a strong move to the downside, or just a pretty big move to the downside, indicating lots of sellers, lots of sell orders being inputted within this price area. So initially we want to mark out this price area where there were lots of sellers stepping in. You can see that's exactly what I did. Let's go ahead and kind of just replot the zone. We can do, my charts are a little laggy here. Let me make sure everything's solid. Let me know if there are any issues too, guys, in the Discord. But we can do right here. We can do this candle, which then led to the move to the downside. Then you can see price tapped into our zone. You can see it broke the zone, but it never completely invalidated it, right? It never completely invalidated it, and that's what I look for my stop losses. But this is when market was closed. Market opened literally right here on this black candle. So this little shaded area is when market is closed, but the less shaded area, or the non-shaded area, is when market opens, right? So you can see here, market literally opens inside of this supply area. Literally opens inside of the supply area, and what happens? Absolutely textbook supply, right? Beautiful. Right off that supply area, you could have entered, stop loss above, close above the supply area, and print it absolutely all day, right? So obviously some zones are going to be stronger than others, so that's why you should never get too greedy and expect such a big move. But just like this, right? This is just a perfect example of your supply zone working out perfectly, right? Market price literally opens inside of your supply zone at market open. You take your trade once you get that strong confirmation of selling. Your stop loss would be a close above the supply area, because if price does completely break that supply area, that means that sellers within this price range are not active anymore. And then that would be that, but obviously that wasn't the case, and you can see the trade absolutely worked out beautifully. So that was that. Let me cover one last example of a zone not working out, and then I will wrap things up. But like I said too, if you guys have any questions, you're confused about anything, you want me to cover anything in specific, definitely let me know. Okay. So let's go ahead and let me look for an example here. Also, keep in mind, the more we tap into a certain supply or demand zone, the less weak that it gets, right? Because, I mean, you always want to look for a rejection into your supply zone or demand zone and then a reversal to kind of get that confirmation that, okay, I've seen a rejection and a reversal from this area. But keep in mind, too many rejections slash reversals within your specific zone, that zone will just continue to get more and more weak, meaning the move that you're looking for is likely to not happen. All right. I'm trying to find an example of a zone not working out, so how you guys are able to kind of best work with it. Okay, here would be an example. This is demand. Perfect. Okay, cool. So here's our demand zone that we had previously charted out. I had done an example with you guys. This was the 30-minute demand and then the 1-minute demand that we had drawn out. So let's go ahead and then we have our zone extended all the way out. Obviously, you can see we tap back into this zone again. We do get another rejection and then another reversal, but then look what happens, right? We continue to fall. We fall pretty significantly, and we even break this zone. We close completely above it. You can see we have 1, 2, 3, 4. We have about 4 candles that close completely above it. We did kind of rebound and come back in, but there really wasn't any aggressive or strong move to the upside after this demand, right? And then you can see we initially just completely broke pretty strong to the downside. But what I wanted to get out of this is when you are looking at your specific supply and demand zones, like for example, let's do this, right? So we see that our zone is created right here, right? Price does its thing. Price taps our zone once. It taps our zone twice, right? So this means we have this would technically be when it was created. Or here's this too. Look, you can even see you extend the zone back. So you would have 1, 2, 3 rejections slash reversals inside of this demand zone. Okay? Like I said earlier, the more rejection slash reversals that we have, the more weak that it's going to get. But you do want to look for a rejection slash reversal. I'm not saying that it's a bad thing, but the more that you get inside of a specific zone, the weaker that the zone will get. So like I said, you can see 1 rejection slash reversal, another rejection slash reversal, another rejection slash reversal. So 3 of them, right? So we extend our zone out and look what happens here. We tap back into our zone, rejection slash reversal, a small one. So this would be the 4th rejection slash reversal. Pretty much kind of giving us the indication that next time price taps this zone, we're very likely going to break it, or we're at least going to break it on the next tap, right? Because the more price touches that zone, the weaker that it's going to get, because those areas are areas where buyers or sellers are looking to step in, looking to input their orders, right? But since they have already done that and done it multiple times, or at least done it largely once, next time price goes back to that area, those same orders aren't going to be active, right? Because they already were inputted on the second rejection, or they were already inputted on the third rejection, or even the first rejection. So never look to trade your zones on like so many different rejections. Although sometimes it can work, it's just not the best thing. But then clearly you can see here we fell into this supply zone, which just means that sellers were pretty strong moving into this demand. And once we moved into this demand, there weren't any clear signs of buying, right? There weren't any clear signs of buying showing us, indicating to us that, okay, looks like these buyers are a bit tired. Looks like they're not as active as we thought they were, or looks like they're not as active as they previously were on the second or third rejection. So that's that. You always want to look at how many rejections there were, and you want to look at how price is looking once it actually moves into our certain zones. Because typically, for example, you can see right here, sellers are super strong leading into the demand zone. But on the second rejection, if you see here, you see sellers are super strong into the demand zone, and then look what happened. Buyers then started to appear, and a lot of them started to appear, right? Considering how strong of the move that we got. But on the third or fourth rejection, like I showed you guys, it was more of strong selling rather than buying, which is an indication of buyers starting to slow down. So that is going to be it. That's going to wrap up today's lesson slash call. I hope you guys were able to find some value from this and, kind of get some, take pieces of what I said and apply it to your own trading, because that's really the main reason why I do these calls. So you guys are really able to take pieces of what works for me and then apply it to your trading strategy, your trading plan, whatever the case may be. So if you guys have any questions later on, or you're ever confused about anything, there's so many different YouTube videos that you guys can check out. Or you guys know I'm live here every single day, always doing calls, answering questions. So you know where to find me. But other than that, I appreciate you guys for being here, tuning into the call. I will be live tomorrow. But other than that, much love, and I will see you guys very, very soon. Peace. YouTube! Hopefully you guys enjoyed the call. Looks like my camera cut out, but I will see you guys in the next video. Hopefully you enjoyed this video. If you aren't in the Discord, definitely be sure to click the link down in the description to come join the winning team and really take your trading to the next level. If you want to work with me personally, there will also be another link in the description that you can click. But other than that, I appreciate you guys for watching, and I'll see you in the next one.